Welcome back. You're watching Ask Profit. Well, a quick detour, and we'll be talking to the management of TCI Express on the back of the Q4 earnings. In terms of the overall numbers, the street was kind of disappointed with the numbers that it posted, but this is because the entire industry is continuing to see headwinds impacting both the SME as well as the institutional customers that are seeing the kind of overall impact in the logistics space. To discuss all of this, we are joined by Chandrel Agarwal, who is the MD of TCI Express, who's joining us now. Chandrel, a very good morning to you. Just wanted to get your sense as to how Q4 and FY25 has panned out for you and the kind of headwinds that logistics is seeing as a space. What is the outlook like?
So Q4, essentially the whole of financial year 25, we saw that we were grappled with high interest rates and high inflation rates, and that really impacted the SME sector. With interest rates at almost inflation rate at almost 9% and interest rates at over 8%. We also saw that it was election year. It was something which we knew that it would be a very not a very good year in terms of business growth, especially in the high value segment that we operate in. In the regular transportation, where the volumes are much larger, there I think it was absorbed. But of course, the volumes were there, but not with the profitability levels that one should expect. This is just a temporary phenomena. I don't see structurally we are having any problems. We have very strong cash flows. We have we made about 110 crores in in profit and 140 in cash profit. So that is quite solid, and I don't see any structural issue as such.
Alex here. The street generally will look forward and look through a few things, but then I'm just wondering that 559 basis point contraction in the margins on a year-on-year basis in the fourth quarter was something that I think a lot of people found a little glaring. And you're saying that there are headwinds, but I think the question really is how long does that last? Does that dissipate somewhat? Is this because you couldn't pass through increases in costs, that input pressure or inflationary pressures remain in toll and labor charges? I see freight rates have also remained elevated. How much of that dissipates in the first half of this year?
So we are the only company which has been showing progressive growth and profit over the past 8 years. It's just that the previous year, last financial year, we saw this major breakthrough in our growths and profits. Again, it's something which I would say is cyclical. It is not permanent, or which is not is going to go on for a long time. India is a growing economy, and we know very well that the headwinds that we faced are going to go away. It's just that the demand is going to be very high. So temporarily, if you see a reduction in profit in Q4, again, because compared to what the street is anticipating versus what is really on the ground are very different. We are seeing that the consumers are not opening up their wallets to the full extent that we are expecting. There is growth in certain sectors like travel and tourism, but if you look at lifestyle and other products which are consumed by the majority of the population, they're all in the lower levels. So I don't think that it's a permanent feature. It's temporary, and going forward we will.
But if you can give us a sense of what to expect, and I appreciate that there are so many moving parts here, but I'm sure that your investors are going to thank you for giving them some perspective on two fronts. One, in terms of top line growth and in terms of volumes that you handle, how do you see that moving? Do you see that moving up? And can you expect, for example, double-digit growth? Top line growth is only about 3% in the fourth quarter or thereabouts. So does that improve, or does that stay a little soft in the first half, in the first quarter as we speak? And at what range do you expect the margins to come in? Do you see it moving back to that close to double-digit number, or do you think that it's going to remain soft right now?
No, I think Q1 will be soft for sure. And going forward, we are projecting about 10 to 12% top line growth, which would translate to about 15 to 16% in EBITDA growth. I think we will definitely go back to the old numbers that we have. And I think there's also a talk about the interest rates being lowered. So we will see demand increase, which will translate to transportation also going up.
If I'm not wrong, in your con call, you did mention that margins have now bottomed out and that you will experience a margin expansion between 150 to 200 basis points. Is that correct? And if yes, what will be the levers in FY26?
Right. So that's one will be volume growth for sure. Second would be better capacity utilization. Third would be marginal price increase. So I think these three reasons would be the prime factors for our profitability to go up.
Okay. And just one last quick question. You have planned a capex of around 500 crores in the next 5 years. Just want to get a sense as to how much of that capex you'll do in FY26 and how will that be funded?
We are projecting about 100 crore of investment. Again, this is all through internal accruals. We are zero debt. So yeah.
Point, you said that capacity utilization you're expecting to increase. In the fourth quarter, it stood at 82.5%. Where do you see that going?
We're going to go back to 85, 86%.
In the first quarter itself?
No, from the second quarter onwards.
Okay. So, and that's why you're saying that the first quarter is going to be a little soft and then it'll improve in the second quarter onwards.
Yes. It's cyclical also, so the business is like that.
Chandler, absolute pleasure having you on the program. Thanks so much for joining us this morning.
Thank you.